Good day, traders. It's Wednesday, October 28th, 2020, and your cherry bomb trade is in for today. I was up at 3:50 in the morning, and I've been waiting for this email to come in. And hey, all right, it's a little different. It's going to be a strangle today. We don't get too many strangles that come out in the cherry bomb emails. Even though I did recently watch a video by Tony Batista, a great video, highly recommend you find it, where he discusses his option strategies and management and whatnot. He talks about strangles being his most popular, I think he was trying to say his favorite strategy. It is not my favorite. When I do my real trades, I do so in an IRA, and so strangles are not an option. So I think that we should look at an alternative to this today and maybe throw this into our IRA. I did secretly put a trade in the IRA yesterday after I realized I didn't actually show myself routing the order. So I'm a little off my game, and I apologize. Hopefully I'll get it better today. So silver, right, is an ETF that tracks the price of silver, and it is a liquidity rank of 4 out of 4, and according to the email, a relatively high IV right now, considering it has been, traditionally a boring underlying, right? It has an IV of 36 right now, IVR of 36 right now. So in just a moment, we're going to hop into the platform and build this trade out. But of course, I always like to start with first saying hi. My name is Neil, and this is Option Theory, and I want to thank you for clicking on this video. If you're new here, new to this channel, what we do here is we build out trades using simulated trading inside of ThinkOrSwim, also known as paper money. You get to have all the learning without any of the risk, so it's definitely something worth looking into. The best thing you can do, of course, if you're new, is to head on down to that description box and find the link where you can sign up for Tasty Trades Cherry Bomb email list. I'm not sending you to a capture page and trying to sell you anything. I'm sending you right over direct link. The only reason it's a bit.ly link is A, because it's shorter, and B, because I just like to know if anybody's actually clicking on those links, right? Head on over, sign up for what you sign up for. There's plenty of other things you can sign up for, and they don't send you stuff beyond what you ask for. I promise they're not spamming. They are a great company, and I think you'll like their content. All right. With that said, now let's go ahead and just take a quick look at the current portfolio that we have right now. I am looking, just as a side note here, I'm looking to potentially close Qs today. It is a iron condor that would benefit from some downward movement, and I don't know if you want to see this, but I'm going to pull this drawer out. Brace yourself if you're faint of heart. There's some red on the screen here across the board. Right, and so QQQ matches up with this future right here, so we're seeing some downward movement there. All right, Paul, apparently I've got some allergies today. Sorry. All right, so that one I'm looking to probably close today. So that could be nice. I'm also looking at XLE because that one has an interesting risk profile right now. But anyway, that's not what you came here for. You came here for looking at a SLV trade. So let's go ahead and do that, by the way. Over here to the Analyze tab, go into Add Simulated Trade. We're looking at XLE, but by the way, there's that, right? Oh, look, it normalized itself. Before it was like all the way over there. All right, good. All right, we're going to change this over to SLV. We are going to go to the December 4th weeklies with 37 days to expiration as of today. And we're going to look at the 20 put, I believe it is. Hang on a second. I have this built out already on Tastyworks. Let me just pull that right up there. 2050 put. Okay. So we're going to sell the 2050 put, which is where we go, 21 delta. All right. So I'm going to left click on the bid for the 2050. And then I believe it was the 25, could be the 26. Once again, I'm going to look again. 26. We're going to do the 26 call. So I'm going to hold down the control key, left click on the bid for that call, and we see that we have a strangle. You may not see it because the little thing is hanging over there. Strangle, we're selling one contract here. We're looking at collecting an $80 credit. Of course, looking to manage that if it reaches 40 cents. So we'll have collected half the profit, or at 21 days. Now, What is particularly scary to most is the unlimited risk to the upside, though I don't think we're looking at too crazy of a potential up run here on this one, right? I mean, if you see where, yeah, it could go, you know, its high was 27.39 here, right? But of course, the risk is to the downside, but at least there's a limit. It could go to zero. Silver could be free, not likely, right? So with that, sometimes you're trading in accounts where you can't actually sell naked calls. You might have to be approved for them, or it's just not even possible at some brokerages, right? But going back over to this Analyze Trade tab here. And what I want to do is hit this risk profile, because now that we've built the trade, let's go ahead and analyze our probabilities. So the first thing, once we hit risk profiles, make sure we're looking at the proper date. So December 5th. Up here, this needs to say the same. So click the calendar and go over past November to December 5th. Let's click there. Now we have our expected move in this light gray area here. And I'm going to just expand that a smidge. All right, so now we're looking at our Strangle. I'm going to go ahead and set the slices to break even at expiration. And we can see that our put side here is inside of that expected move, while our call break even is outside of that. We're looking at a 66% probability of ending up on or between these gold lines. And if you look at the P50 on that one, I'll bring Tastyworks back up again, because Tastyworks, thank you very much, gives us this P50. So while we're looking at slightly different numbers, so here they're saying the probability of profit is 70%, and the chance of us collecting those $40 within the next 37 days is 80%. So those are some high probabilities. Of course, it comes with high risk. But with Strangles, if you're going to put them on, if you can put them on, you're going to want to monitor them a little bit more closely. Maybe set some alerts, right? So let's minimize this and decide, are we going to put this on? Well, because this is our time to test our theories, time to put ourselves in situations. And hey, remember, even if this goes against you, this is the perfect opportunity to practice trade management, to find your mechanics, right? So I'm going to go ahead, I'm going to right click this trade. You're going to see the scaries. You have infinite max loss, all for a whopping $80 of credit, even though we're only going to look to take it at 40, right? I'm going to hit send, and that's going to put that into my working orders, right? And should that fill, right, we'll set a good to cancel order so that when it's worth 40 cents, it automatically comes off and we don't have to think about it. But I would also want to set an alert as well to see, you know, hey, what are the mechanics on this one? Anywhere from 2 to 3 times the credit received would be the loss at which we would probably want to cut it, right? Depending on, you know, what happens there. We could, if it moves real fast, right, then that might be something we have to do. Like, unfortunately, a Strangle that I got really burned in United Airlines, that happened. I had to cut it off, and I took almost a $700 loss, right? But we've recovered, thank you very much, right? We're up here at $2,200 of profit right now. So, you know, stay mechanical, right? Trade small, trade often. So I hate to say it, but I don't hate to say it. They're right? There's a reason they say that. Okay, so with that, I want to, I guess, a bonus. Let's go over into the IRA account here, and you'll see actually what I did yesterday is I sold the opposite long put vertical. So in the cherry bomb, it had us buy. I didn't sell it yesterday. The trade was to buy a long call vertical, and in the IRA account, I decided, you know what, let's buy a long put vertical and just see which one wins. And believe it or not, both can win, right? If one wins, you can take your profits, and you know, because they're often 50-50 trades, it might go up or down. And if you can pull a profit on one and then it comes back up or down, right, you can get the profit in both, actually. So I'm kind of curious and having a little fun and see what can happen here. All right. Let's take a look and see if there's another trade that we can build inside of an IRA account using SLV. And we're going to do that. Go to add simulated trade. We still have SLV in here. We're going to still stay in the same expiration. And what I want to do is look at building a Jade Lizard, maybe. That's often one that I do that I feel like is an option for this one. So let's take this one that's close to the 30 delta. Let's sell the 2150. We're going to collect about 69 cents right here. Okay. And then over here, we want to do a short call vertical. So I'm going to hold down the control key and let's try the 24.50 and 25.50 here. All right. So we're looking at a 90-cent credit on that one. That's not enough. So let's see if we can take this. Do I want to bring the put up? Not particularly. So let's see if I bring the call down a little bit. So let's take this call that we're going to sell from the 24.50 to the 24. What I'm looking to do, the reason I'm tweaking these numbers, is I want to get it to be the credit that you receive to be at least the width of the call spread. So that one's not going to work. It's pretty close though. So if we just show you what I'm looking to do here, you now can see that what we're looking at here is a similar, like, you know, the put side, of course, remains unlimited risk to the downside, right? But over here, we're looking at essentially no risk to the upside, right, on this one. And our probabilities on this one are not as good. So, but what we could do, let's take this one just to make it easy and roll this put up to the 22. Now we're collecting $1.14. Now, if I set these probabilities here, break even, now we're looking at a 66% probability of profit of anywhere ending up on or to the right of this line here with no risk to the upside. But if we end up in this range here, at expiration, we could collect $114 on that one. So this one would be something we would look to manage if we got, you know, 55, 56, 60 bucks, somewhere in there, we'd be looking to close that. That's an option for this one. I think we're going to throw it in there just for ha-has and see what happens. Let's test it out. Let's see if it works out for us. I'm going to right click this one, choose confirm and send. We see that we do not have a max loss of infinite. Yes, of course, though, if this silver should become free to pull out of the ground, we could lose that much money. All right, everybody, I'm going to hit send. And we're just going to put that into our working orders here in the IRA account. And if you've made it this far, you are my hero and you deserve a thumbs up. I appreciate that you did that because it helps me. And, you know, I'm trying to help you and I appreciate you helping me. So if you think that I earned a thumbs up, would you mind hitting that? And if you haven't yet subscribed to the channel, that's okay. I'll still be here. Hopefully someday you're going to hit that subscribe button, ring that bell so that you get notified when our videos come out. And until I see you in tomorrow's Cherry Bomb, happy trading.